afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. Markets are set to snap a two-day rally. The Nifty trades around the 10,700 mark. Most sectoral indices decline in trade, while Nifty Pharma is the top sectoral gainer. Sun Pharma gains the most in 5 months, and it is the top gainer on the Nifty after the US FDA gives a VAI status to its Halol plant. Indian 10-year bond yields climbs past the 8% mark for the first time in 3 years. The rupee weakens further. And Interim Finance Minister Piyush Goyal is meeting heads of PSU banks. Bank consolidation is also on the cards.
Well, viewers, thanks for tuning in to Countdown on Bloomberg Quint. My name is Neeraj Shah, and the markets, not doing all that poorly, I might add. We are off the lows of the day, though we've been in this very narrow band, lackluster trade for most part of the trading day today, in line with what the global markets are doing, to be honest. So nothing untoward, just about par for the course kind of correction that is coming. Financials a little bit more hit than what the other names are. Maybe with reason, with the yields doing what they are doing or otherwise. So Nifty Bank, when you see that one is down about 0.6%, again off the lows of the day, but still in that slow grinding band that we've seen the Nifty Bank trade for most part of the trading day. The mid caps and the small caps, the indices may show one thing, but trust me, the numbers don't look all that poor, and maybe which is why the BSE small cap index is up 0.25%, because none of the losers at the broader end of the spectrum, which are down about 4 or 5%, the NSE 500 losers, are really those big names. The 1% beverages and the qualities are going down. It's not some of the others which have corrected quite a lot. However, the heat map on the Nifty first, before I hand it over to Navneet on what's happening in the more liquid universe. Commodity names, Hindalco, etc. have corrected. I was speaking about two names, HDFC and ICICI Bank, from amongst the financial space, which are down today, and they are putting that pressure. And OMCs, BP, HP, IOC are down. Reliance is not in the green. HDFC twins are not in the green. In fact, HDFC is in the red, as I said. Countering that move are exporters. So Pharma and Sun Pharma, of course, has reasons of its own, but some of the others too, Cipla, DRL, Rupin, are in the green. And then some of the IT companies too have not done too badly. So Tech Mahindra, TCS, HCL Tech are trading in the green, which is not bad. And Reliance, by the way, I stand corrected, was in the red at the start of the trading day, is now in the green as well. So not bad going. And just keep in mind, just before I hand it over to Navneet, if we can get some of the pharma names out here on the screen, at the broader end of the spectrum, Spark, Ajanta Pharma, Stride, Sashun, a clutch of these names are having some very good moves in the session today. So it's all-round pharma rally. Ajanta Pharma about 5%, Sun Pharma Advanced Research 11%, with reason, of course. Stride, Sashun, if I'm not wrong, was also trading in the green. Wokhard is up about 5.5%. So pharma seems to be the buzzword in the session today. That's as far as almost the large cap names go. What about the liquid universe?
It's all dominated by pharma if I look at the stock futures, Neeraj. But talking about the indices first, the discount on the Nifty futures has actually widened. So let's pull up the Nifty futures right now. The discount is 23 points versus 3 points, which was seen in the closing trade yesterday. But if you look at the level, 10,733 for the underlying, that's off the opening lows, I would call it. So we've not seen major correction considering the sort of gains that one saw in the last two sessions. Bank Nifty futures have also been trading weak, but way above the 20-day moving average. So that's somewhere about 26,230. Watch out for that. Quickly, some of the option strike for the Nifty, 10,007 and the 800 call strikes have seen some open interest addition. So some bit of riding seen around the 700 mark, 4.5 lakh shares being traded there. The 10,600 put, which is sitting with maximum open interest, continues to see some addition coming once again. So 4 lakh shares are being added there as well. 75 rupees is the premium there. Neeraj was talking about the pharma stocks, and if I look at the F&O gainers, 4 out of 5 top F&O gainers are the pharma stocks, and I'm going to talk about two of them. Stride, Shasun, that snapped the 8-day losing streak. This counter was quite weak in the last few days. Open interest has surged on the future side. Gains have also been seen in terms of high volumes that one has seen on the cash side. So definitely watch out for the delivery data here, and we'll delve more into Sun Pharma. But let me just tell you what's happening on the futures and options option side. That too has gone up on high volume, so definitely watch out for the delivery data here. Futures have seen 5 to 6% in open interest addition coming by, but most importantly, just look at the option strike. I remember in the last 5 to 6 series, there was a lot of call writing which used to come around the 500 mark, and today is the day when I've seen some unwinding coming in for the 500 call strike. That's a very, very positive sign. Remember, the underlying is also trading above the mark of 520 right now, so the maximum open interest is at 500 put and also at 520, 540 strikes, indicating a short-term range of almost 520 to about 540, at least in the next 2 sessions, Neeraj.
Well, so the common names are there, and not surprisingly, we're starting off with some of the pharma discussions as well. Remember, it's Friday, that time of the week wherein our research team members get you all the top newsmakers of the day and why is it that they are doing what they are doing. Darshan, Jayesh and Yatin are joining us to talk about that. Darshan, needless to say, let's start off with Sun Pharma.
Yeah, it is, because the most important news that came out on Sun Pharma was that they got the VAI for the Halol plant. So basically this was updated by the US FDA yesterday on their website. We came to know of it right now. So what a VAI means is that, the management had already indicated in the conference call that, 3 observations, they're not critical and they expect the plant to be cleared soon. So they have gotten a VAI, which means that a voluntary action is initiated. This means that now voluntarily Sun Pharma will have to make some changes to their plant. No official, action will be taken by the regulator on Sun Pharma. The inspection was completed in Feb 23rd, post which 3 observations were given on Sun Pharma's Halol plant. And now, because of a VAI, it means that the plant is almost ready to be cleared. But remember, the warning letter has to be lifted on Sun Pharma before they can start again exporting to the US market. So it's been a very rough ride for Sun Pharma's Halol plant, given the fact that the nature of the observations were procedural, what happened in the Form 483. What is the Halol plant? It contributes 11% of the US sales and 4% of the total sales. At one point of time, it was extremely large, but because of the integration of Ranbaxy and pricing pressure issues, it's become just 4% of the total sales. But a lot of important products are filed from that plant. Now, just to take you what happened was in earlier in September 2014, the slide will come up. The US FDA inspected the Halol plant and awarded 23 observations on the Form 483. So that was something that was difficult for Sun Pharma. Again, it was re-inspected. Then they got a warning letter with 6 observations in December 2015. So that was important for Sun Pharma. Again, the warning letter continues. It was again re-inspected in November 17 to December 1st in 2016. Again, they got observations in this plant also. So they got 9 Form 483 observations in what was there in the December 1st observation. Again, the US FDA inspected the plant in February and they managed to get only 3 observations. So now the management commentary was important. They expect the plant to be cleared very, very soon. But remember, the warning letter has to be lifted before they can again start exporting to the US market.
All right, Darshan, thanks a lot for bringing that detailed analysis as to why Sun Pharma has been moving higher. But moving on from Sun Pharma, we've got Jayesh Kilnani, who's standing by and who's been analyzing some data from AMFI. Jayesh, what are you tracking?
So Navneet, AMFI released their May monthly numbers for the mutual fund industry. What we have on the screen is the total inflow-outflow number, and you can see that for May 2018 we have an outflow of about 50,000 crores after getting inflows of more than 1.3 lakh crores for the month of May. So that's the total outflow picture. What has led to this outflow of 50,000 crores largely contributed by the liquid category, which has seen outflow of about 47,000 odd crores. The positive cues came in from the equity flows. Now, if you add up the equity flows and the ELSS flows, the total for May 2018 was at about 11,346 crores, which compared to April was a slight dip of about 10%, so 12,500 is what we had done for the month of April. Now, except for March 2018, you can see that consistency of the flows of funds has been maintained into the equity category. So there was some positive for the equity side as well. If you have a look at the total asset under management, what India has right now, you'll be able to see that it's close to 22 point some lakh crores, and that is a little bit lower than the 23 point lakh crores that we had done for for the last month. That's the chart that I was referring to 22.6 lakh crores for the month of May and 23.25 for the month of April, which also was the record high asset under management. As far as equity asset under management is concerned, we've seen some bit of dip come about for that as well. So has declined from about 8 lakh crores to 7.6 lakh crores. If you can have that chart on the screen, you'll be able to see from 8 lakh crores to 7.4 lakh crores. What I did additionally was speak to industry experts and get a sense of what they have made of these numbers. I spoke with Swaroop Mohanty of Mirae Asset Global Investment. He said that it's very encouraging to see the numbers in equity have been retained on a net basis, because May was a month where we had a lot of volatility. In fact, Nifty Bank was the only index which gave you positive returns. So during such volatile times, investors generally tend to redeem. So that was the encouraging sign. Jinesh Gopani of Axis Mutual Fund also, second that thought, and also said that they've seen strong inflows from the SIP book, and also they expect that the current level of equity flows is likely to sustain going forward.
Okay, thanks a lot for that, Jayesh. And Yatin, the news about Adani Enterprises, they've completed the refinancing deal with Abbott Point. What is it that people should take home from this development?
Well, it doesn't seem a very big development. Of course, the Adani's Abbott Point port credit rating was at risk, because we had various rating agencies which said that they must refinance the port soon, or face a rating cut. So the rating cut probably is behind us when it comes to the Abbott Point port project. In fact, the Adani spokesperson confirmed to Bloomberg that the total refinancing has been done. Of course, they did not give any specific details, but the Bloomberg copy indicates that the total refinancing that Abbott Point port was looking at was close to 326 million Australian dollars, and that loan was maturing somewhere in November. So probably 3-4 months ahead of the repayment schedule, they have been able to refinance this debt portion, and probably it could be a shot in the arm, because various Greenpeace protesters and various environmental protests were happening. They were lobbying for the banks not refinancing the loan, but finally Adani seems to have managed to refinance this particular loan. Adani Enterprise, of course, is the promoter of this particular asset. Stock hasn't seen much of reaction post this news came on the wires.
More important, nevertheless, Nathan, thanks for putting that into perspective. So that's some stocks and some things, some newsmakers to watch out for. A small take from our special series of how to invest. Motilal Oswal's Ramdev Agrawal talks about how conducive government policy is ideal for value migration, and talks about HUL and why he feels it's time for HUL to reap the rewards for their rural investments made in the past.
Wealth actually migrates. It's a trickle down. I mean, you can't stop it. Global wealth in aggregate is growing, and it is trickling down. US is the kind of a major hub of wealth creation right now. There is always a leader at a given point of time. At some point of time, it was UK and Europe and all, and now it is US. So from US, everybody is working for US. So at some point of time, textile was one of the major source of value migration. So it went to Japan. So Japan made all kinds of textiles, shoes, and all kinds of consumer goods, electronic gadgets, and they supplied to this thing. And Japan became as rich, or probably more rich than America. Then Japan went into, after that 70s or 80s scorching growth, and from 325, 400 yen to $1, it became 80 yen to $1. So that was a migration, and your per capita GDP from $3,000, $4,000, $5,000, it went to $40,000, $50,000. So that was one of the largest value migration, and in that America didn't suffer, but Japan went up. Okay, then after that Korea, after that Hong Kong, probably Hong Kong first, then Korea, then China, which is the largest one, which we have seen in the last 15 years. It happened right in front of us. Till 2002, we didn't know where is China, and today China is everywhere. So, I mean, it is for the countries also to play their game very well. You have to create a conducive condition for migration of global values into your country. If you keep restricting all, see, when anybody wants, say like in Orissa, we got opportunity in the steel boom, we got opportunity to set up huge steel plants. But when they came, we couldn't just clear any of the projects. So value couldn't migrate from, say, Chinese steel companies to Indian steel companies. So when the world will throw opportunity at you, in software we were very good. When the opportunity came in 90s, Y2K problem came, we were really put our best foot forward. Government gave the best possible taxation structure, no tax for 10-15 years. There was no restrictions and no forex. I mean, I think it is a terrific example of how you create a value migration in the country. And huge value migration, it's $1 trillion value migration. That itself has changed. I mean, we are now, in 2000, we are doing $5 billion of export. Today, we are doing 120 billion and still growing. So that's the level of migration you can create if the country, governments, and they're aligned and they're agile to the thing. They have to decide where is my strength and where I want to create this migration, which space.
Who do the next 15 years belong to then?
It looks India has a terrific chance.
And what within India then?
No, then that's a big question. I mean, see, once you've done India, then see, I mean, the way I see it is so exciting in India that, I mean, we will emerge. Whether we'll emerge, some other country will emerge faster than us. But I don't see any large country at this juncture of this magnitude. The pace at which China could do it, we have opportunity to do it faster than China. But we got to really manage it well. And most likely, I would say very high probability that it will happen. Because now the enterprises are not in the hands of government. Enterprises are in the hands of newer businesses, are all in private sector. So they will happen. Like Infosys happened, Wipro has happened, not at the mercy of government. Of course, they have provided the conducive environment. And now this government is talking about ease of doing business. They are much more open to cross-border everything. I mean, they are much more business-like. So my sense at some point of time, or it's already probably happening, where migration of a lot of businesses could happen at a very rapid pace into India.
Okay.
And the per capita GDP growth, which is about 7.5%. I mean, if it accelerates, if it maintains even this pace of 7.5-8%, it's a massive. I mean, see, once you gain size from 2 trillion to 5 trillion, 7 trillion, the world will listen to you. I mean, you want to buy 500 planes, 300 planes every year. I mean, both the global supplier, who else is absorbing this number of planes? You are the biggest defense buyer in the world. So it all changes because you have money in the pocket. So you have to, once you create the growth and money in the pocket, everybody rallies around.
What about the domestic space? And the reason I bring this up is trying to understand from you about companies. I don't want you to name companies, but say, I'm just giving an example. An HUL, for example, for the longest time, people thought that it's a stable company, stagnant company. Suddenly, after a long phase of maybe value stability, it's looking like starting off a phase of value inflow once again. There is not come a phase of value outflow. How does one dissect all of this?
So Unilever in India has always been, kind of a value inflow, then stabilization, then again inflow, then stabilization, then inflow. You will never find Unilever ever has kind of a value outflow kind of situation.
Why so?
Because all the products, first thing, all the products are day-to-day needs. There's not much of disruption out there. You're still washing your clothes with a surf or whatever, I mean, detergents and all. You still don't have a digital way of cleaning your clothes. Okay, or washing your the same body. You still use the same, scrub your same soaps. You're not using any digital way of cleaning. Okay, get into the room and boom, you press button, you are washed. It's not happening. So actually not much has changed, except for cell phone and computers. What has changed in 40 years? And they are part of that so-called old economy or consumer needs around.
So, that's the question.
And our penetration of those products were like, we were 85% people in 85 were below poverty line. What has changed for them is the market size of those, the consuming population has grown. So people who are not using toothpaste, they are using toothpaste. People who are not using good detergents, they are using good detergents. So they are the master marketeer. They exactly know whom to sell what at what price and when. And they are 2-3 steps ahead of the incoming trend. So they position themselves in rural India way ahead. They invested and probably they never got paid. Now probably the payoff time is coming.
Well, before we move ahead and speak to our management of Omax Auto, I just want to highlight a couple of the PSU banking stocks have started to move higher. So pull up something like PNB, that's up 4.5%. Allahabad Bank is up in trade. And also we've seen stocks like Andhra Bank, that too is about trading around at day's high level. Remember, the interim finance minister Piyush Goyal will be meeting the CEOs of a couple of these PSU banks. So let's see if the consolidation is on cards, which a couple of the reports were also suggesting. So Andhra Bank is up 5.5% at day's high. But switching focus to Omax Auto, where the board of the company has approved expansion plan. They are looking to double their capacity from the existing capacity they have in the next 2 to 3 years. The company is also planning to invest about 100 to 120 crore rupees for the same. Let's get some more details about their expansion plans. We're joined by Mr. Devashish Mehta. He is the Vice President at the company. Mr. Mehta, good afternoon to you and thanks a lot for joining us today on Bloomberg Quinn. First, a word on your capacity utilization. Since you're looking to double your capacity in the next 2 to 3 years, tell us what's the current capacity, where do you plan to take it in the next 2 to 3 years, and what is the reason for the same? Is it only to cater to the railway side of the segment from where you've been getting some orders?
Good afternoon. Thank you for having me. So I'll just give a little bit of backdrop behind the capacity expansion before I talk about the current capacity utilization. The Indian Railways has taken a decision to replace the conventional ICF design coaches, which are made with mild steel, with a German LHP design coach all throughout the country. And this is a move to basically improve passenger safety and prevent two coaches going on top of each other in the case of a collision. So there are roughly 45,000 coaches in circulation today, and this replacement is planned by the Indian Railways in the next 7 to 8 years. So the movement, the rationale behind our capacity expansion is to support the Indian Railways in this initiative. And with respect to our current capacity utilization, our plant, which is in Binola, is running at roughly around 72% capacity utilization. And we are processing roughly 4,800 tons of stainless steel every year. So with the expansion that we are now going to be doing over the next 2 years, this number of 4,800 is likely to double.
Sorry, Devashish, can you put this into perspective? Sorry, I kind of missed the numbers. You're saying 45,000 coaches are running, which will not be upgraded over the next years, and therefore new coaches will have to be bought? Is that the point?
Yes, a majority of these 45,000 coaches will have to be replaced with the new LHP design German coaches.
And this is over a period of the next 8 to 10 years?
7 to 8 years.
7 to 8 years. Okay, and what, so would there be a run rate which is divided across 8 years, or would it be back-ended? How does, what I'm trying to get at is that one is that there is a replacement that is going to happen, 2 is the quantum of the replacement annually, and 3, how does a company like Omax benefit out of it?
Sure. So if we talk about the 45,000 coaches, if you divide that up amongst 8 years, so roughly a little less than 6,000 coaches per year by the production units will go towards replacement. On top of that, then there is an annual demand of new coaches, which is roughly 3,500 every year. So the move by the various production units of the Indian Railways is to go towards a capacity of roughly 10,000 coaches per annum. Your second question was with respect to Omax's play in this. So we are making various products with respect to the coach shell and the coach furnishing items to support the production units, and we are basically now looking at expanding the capacity for those products.
And how much of the capacity will come on board in FY19? I know you're looking to take 4,800 tons per annum to almost 9,600 in the next 3 years. How much will come on board in FY19?
FY19, actually, maybe in the last quarter, we will start, formal production.
Okay.
So I think roughly around 15 or 20% of the overall capacity will come online around that time.
Just a bit of clarification. I'm going back to my first question. Is the additional capacity coming on stream only to cater to railways? If the answer is yes, Devashish, what sort of additional revenues then one can expect from railways in the next 1 to 3 years?
So the new capacity that we are adding is dedicated for railways, yes. And if we look at the last financial year, our turnover from the Indian Railways was roughly 150 crores. And our target is that by the year 2020, we want to take this figure from 150 to 500 crores.
Interesting. Counterintuitive, Devashish? I mean, most people who are well entrenched in the railway order space say that the orders are very sporadic. Why do you believe that it will be different over the course of the next 5 to 10 years?
I think that there is a conscious effort being made by the government and by the Indian Railways to improve passenger safety. And the backdrop of, the railway accidents that we've been reading in the news about over the last 18 to 24 months has created a sense of urgency within the system and also within the tier 1 suppliers for the Indian Railways. So I think that when it comes to safety, there is no question of sporadicity or a question of basically delaying efforts on that front. So, research has basically proven that the new design of coaches almost reduces or eliminates the risk of passenger casualty in the event of a collision. So I think there's an urgent need there.
And does this therefore enable you to reduce your dependence on two-wheelers as well? I mean, so if you take from 150 to 500 your railway contribution, what percentage, whenever it reaches 500, as per your initial estimates, would it form as a part of your overall total revenue?
So our strategy is basically to grow 3 segments of the company, one of which is railways, and the other 2 are our passenger cars and commercial vehicle businesses. So yes, once we take this figure from 150 to 500, our dependence on the two-wheeler business will drastically reduce over the next few months.
What percentage would railways form of your overall order book, or overall revenue, as the case may be, whatever 2 years down the line and 3 years down the line?
3 years down the line, I think it's safe to say that railways might account for anywhere between 35 to 40% of our overall sales.
Sorry, just a second. No, sorry. So this 500 number is what for the next 2 years?
500 number is the financial year 2020, 3 years. And 2020, 2021.
No, I'm just a bit confused here. Your current revenue, FY18 revenues were what, 1100 odd crores?
Yes.
So if 500 crores account for 40%,
financial year 18 revenue is 1,208 crores.
Right. Yeah. So if 500 crores is 40%, you virtually guiding to no growth in FY20.
We are actually now our 500 crores. Actually, the figure that I'm talking about, it's only the railways business. So,
yeah, but if that is 40%, then your 100% would be about 1,200 crores, right?
Yeah, I think I made a mistake there. It won't account for 40%. It'll account for almost a little less than that.
Okay, fair call. But about approximately 500 odd crores. Sorry.
Yeah.
So the current contribution from railways, Devashish, is somewhere about 10 to 15%, which you're suggesting will go up. I want to know, how does it impact your blended margins then of the business if the contribution from railways will be going up in the next 2 to 3 years?
So our EBITDA in the last financial year was 4.5%, and it stood at 53 crores. And this is basically net of certain one-time adjustments that we had to make as a part of certain consolidation exercises that we undertook. So our operational EBITDA stands at 6% as far as last year is concerned. And the margins, as far as the non-two-wheeler part of our business is concerned, is much better. So we are expecting that our EBITDA margins should improve basically to the range of maybe around 7 to 8% going forward.
So if the contribution of railways is going to go higher, that also means your margins will remain stagnant, because if I'm not mistaken, margins from the railways is not too high compared to the other businesses.
Our margins from our railway business are better than our automotive.
So let's say for FY19 or FY20, by when you're targeting railway revenues to be 500, so the margins will still be somewhere about 7 to 8%, what you're posting right now?
The 7 to 8% figure that I'm referring to, I'm talking about the target for this financial year.
Okay.
So our target basically when we talk about the financial year 2020 is to take this into double digits.
Okay, fair enough. Double-digit margin. And just a last question from my end, Devashish, how do you plan to fund the expansion plan? I read that you're looking to dispose some of your existing surplus assets too, besides internal accruals and external borrowings. What are these surplus assets, if you could give more details on that?
So we are looking to fund this expansion through three sources. One is the disposal of our surplus assets. So we have land right now in Gujarat and certain parts of northern India, which is not being productively used at that time in terms of our core business. So we are looking at basically disposing those parcels of land. The second source is through our internal accruals, and the third is debt. So, if I talk about the ratio, we are looking at a 1:1 debt equity ratio for this 120 crores of fund.
You also, one final question, Devashish, you also entered into some kind of a development agreement for a commercial complex for some land that you have in Gurgaon?
No, Omax Auto has not entered into any commercial agreement for developing land.
Oh, so, okay. There's a report which says that some commercial complex with Space Tower Private Limited for land at Tikri. That's not true.
That report is actually had some errors. That is being done by one of the same promoters as Omax Auto Limited, but is not part of the parent company.
Oh, okay. I'm glad you gave that clarification as well. Anyways, wish you all the best for this and more, Devashish. Thank you so much for taking the time out, and we hope you have even better 2019 and 2020.
Thank you very much.
That's Devashish Mehta of Omax Auto. Talking about his thoughts on the capacity expansion plans and how they would go ahead. Well, some of the auto components seem to be having a fairly decent outing the last few weeks. What the markets are doing right now, well, about 0.25% lower. So they've come off a little bit from the lows of the day, which is actually not a bad sign. The Nifty Bank too is off from the lows. So just a dull, boring kind of trade, but within that, enough and more pockets which are doing the rounds. Let's talk about all of those. First, start off the conversation with our technical experts. Mohit Gaba, he's trader and technical analyst, joins us in our studio right now. In moments from now, we'll get in some of the others as well, and then Nitasha Shankar will join in to talk about the fundamentals as well. Mohit, let me start off with you first. How are you approaching trade after 2 strong days? A bit of a lull. Is this disconcerting, or are you staying long if you were long in the first place?
Well, so actually in the morning, I did go short, which I had to cover because the markets are inch higher, and then went short again and made some money, covered before 10,700, which for me is a pretty strong support area. It's been defended pretty well. But what we've seen on the index is that it's been trading at a discount throughout, and there's a fluctuation of the discount between 10 points and even 20 points, which was the worst discount for the day. So you're seeing this 10,700 zone being defended pretty well as of now. I would not be comfortable going long as yet because there's still no clarity on the trend, even in the very short term from an intraday point of view, because the market is chopping around. But broadly, you're in this range of 10,400 to 10,900, and you have to be pretty nimble-footed within this range to trade from a very intraday short term point of view. I don't think that there is even a positional trade on right now on the index. We have to wait for some kind of clarity either on the upside or downside before you can take aggressive shorts or longs.
Okay, discount has definitely widened if you compare it to yesterday's discount of 3 points on Nifty futures. It's currently 23. But Mohit, in terms of individual stock strategies, what are you recommending?
Well, 2 stocks which are looking good in trade today. Emphasis is one which is in a pretty strong uptrend. The IT index also was doing well in the start of the day, and this can continue to head higher towards levels of 1140. This could be bought with a stop around levels of let's say 790. So 1080. So this can head higher towards 1140. The other buy was Lupin, and this has also kind of seen a really good up move in trade today, like with the likes of the other pharma stocks. So this also can rise higher in the coming few sessions towards levels of 825, 830. This is a buy with a stop around levels of 790. Just a word on the pharma stocks. A lot of them have seen a very big up move in trade, and purely from a risk to reward point of view, if someone's looking to buy them from like a 12 to 18 month, even 24 month point of view, I think these are good entry points in a bunch of them like Glenmark, Lupin, even Sun Pharma, which is up pretty smartly today, because the downside is limited, and the charts, it seems like it has kind of bottomed out. You haven't got confirmation as yet, but things are looking very, very positive in the chart structure given the amount of time we've spent at these levels.
Okay.
Plus, this sector is very under-owned, so I don't know how much more selling you can see in them.
Okay, we'll pose that question to Nitasha Shankar as well, but just want to mark a couple of stocks before we head to her. BEML in the last 15-20 minutes, or maybe slightly longer than that, has jumped up a little bit, so some upsurge there. IFCI has done that, Coffee Day has done that, and stocks like PVR, etc. are trading with reasonable gains in today's session, so do watch out for them as well. These are stocks which have all inched up in the last few minutes of trade. PVR2 trading almost 6%, trading very close to the day's highs. Let's get in Natasha Shankar, Senior Vice President and Head of Research at Yes Securities, with us in our studios as well. Natasha, good having you. Thanks so much for joining in. I don't quite recall what your last stated view on pharma was, but if you were not bullish, are you slowly turning bullish? Maybe due to valuations, maybe due to approvals, maybe due to a mixture of both.
So we are bullish on a few stocks in the pharma sector, but not really bullish on the sector as a whole. Aurobindo Pharma is one of the stocks that we've been bullish on for a while, and finally it has started moving upwards as well. Even for Sun Pharma, we do think that this is, it's sort of hit its bottom and it should start trending upwards. We've seen one of the indications coming in today, and that's another stock purely from the risk-reward perspective that we're quite positive on.
But what did you make of the news? We knew that there were 3 observations which were given in the month of February, but now they've received the VAI. How much of, up move can it see from the current levels? What sort of contribution can the clearance for this Halol plant bring in for the revenues?
So we do think that, you have to look at Sun Pharma in 2 ways. One is, of course, that the stock has gone through a lot of derating, which is also warranted given the fact that most of their, a larger part of their portfolio is facing higher competition. But the second part of it was largely sentimental. So if you're really looking at the kind of clearance that they've got for the Halol plant now, so that sort of removes the ambiguity which was related to the plant as well as the regulations, and we should start seeing it contribute. Now, in terms of revenue, Halol always did form a major chunk of it, and more importantly, it formed a major chunk of any further approvals that they seek from FDA. So overall, more from a sentimental perspective, this is a good news coming in, and we do think that in terms of both valuations as well as risk-reward ratio, it would make sense to go long on Sun Pharma now.
How much upside from the current levels?
So we see an upside of about 15 to 20% over the next 12 to 18 months.
Do you guys track Sun Pharma Advanced Research? Because I think that contributes a bit to some couple of products exported out of Sun done by Sun Pharma Advanced Research. Do you track that one?
So we track it as a part of Sun Pharma, but we do not have any independent view on it, on the stock itself.
Oh, okay. But okay, so leave out the stock. Do you believe business for Sun Pharma Advanced Research could also pick up as a result of the Halol clearance as and when it comes about?
I think we had forecasted about 8 to 12% growth if the clearance does not come through, and about 12 to 15%, which was the best case scenario. So we still maintain the same.
Okay.
And the other stocks which are rallying in trade, do you think it's just a rub-off impact? We can see more of such moves coming in from US FDA?
I hope so.
Because the overarching theme so far was the pricing pressure, and obviously these observations being, issued by US FDA. So one hurdle is cleared, the second is still there, pricing
So I think
pressure.
the second one is more of a structural issue. You're going to see a lot of derating, which is warranted for some of the stocks, not across the board anymore, but for some of the stocks, given the fact that their margins are going to be revised downwards, and that would become the new normal for them. Earlier they were enjoying margins and returns on equity in excess of 30%. And we really don't see those days coming back anytime soon. So there will be a bit of a derating for some of the stocks, but not across the board.
Let's get in Sarvendra Srivastav, market expert. He also joins us on the show. Sarvendra, good afternoon. Thanks so much for joining in. We're talking about pharma currently and the kind of moves that this index has shown, and some specific pockets out there have shown as well. What is your view out here before we get to some specific stocks? And we'll take in your market view in a bit. But since we're talking pharma already, what's your view on how do the charts for the Nifty Pharma Index or some of the select pharma names look like?
Yeah, very good afternoon, Neeraj. No, I think we were the first early bears on pharma in 2015 when we were doing your weekly shows, the market wrap-up. And from that point in time, whatever was expected as a correction probably is now getting over for the pharma space. And last also when we were discussing a couple of quarters back, we said that now we don't mind looking at pharma from the buy side. So I would also believe that the worst probably is behind. So case-to-case basis, I think the worst is behind, or in some cases 80-90% of the damage has been done, and probably another 5-10% of the last leg could be left. So by and large, the whole pharma space and the leading names like DRL, Sun Pharma, Aurobindo, barring apart Ajanta, where we still believe there's some more decline spending. But these three names, which is DRL, Aurobindo and Sun, I think that yes, the worst probably could be over, and a repair process could begin or already begun. So the bottom formation will not be a V-shaped recovery. But yes, over the next 1 to 3 months, gradually they've already bottomed out and gradually they will base out and then probably start moving up. So Pharma is a thumbs up from me, and at lower levels, we will definitely look to buy some Pharma names.
Okay. Savindra, what about your specific stock recommendations for this afternoon?
On the index, to start with, the first thing is that we maintain the strategy that we had last week, that we are saying that buy the 10,700 put. So currently it is around 100 odd bucks. So you buy that and keep it till expiry. While doing that, you keep a stop loss there on that one and at 69.80 and hold that put for expiry. And coming back to stocks, the first solitary buy that we have is on Bajaj Finance. The rationale here being that the stock had a very nice consolidation, post which it is wanting to break out. So this is a positional trade, close to around 10%, 8 to 10% kind of targets are possible from here. So what we are saying is that buy Bajaj Finance for a target of around 2400, 2420 thereabouts. And when you are doing that, keep a stop loss at 2144.40 on a daily closing basis. And it's a more buy and hold types. So anywhere between 7 to 15 working days is what the stock could take to reach there. The remaining two are with the market view, where we have sells, and Ashok Leyland, where we have recommended sells earlier as well. The stock has had failed momentum readings into the new high, where momentum did not confirm. Stock made a new high, and post that there's been a decent correction. This pullback now, which is now close to 50% of the previous fall, we see it as a pullback. So we think that the prices will start falling again. 133, 132 would be the target on the downside. These are spot levels. So sell on Ashok Leyland for a target of 133 with a target of 151, with a stop loss of 151.10 on an hourly closing basis. And last one is a sell on Dabur, again being a slightly positional trade with around 8% kind of a target range. A sell on Dabur for a target of 355 with a stop loss kept at 393.60. And this stop loss is also on daily closing, and all my levels are spot levels.
Okay, some buying emerging in the last 10 to 15 minutes of trade. Nifty is almost recovered majority or almost all of its losses, 10,762 down only 6 points. Bank Nifty is also trading just with cuts of 80 points. And I think the heavyweights, Reliance Industries is at day's high. You've also got something like TCS, which has gone up in the last 10 to 15 minutes of trade. Yes, Reliance is up almost 1% in trade. TCS too seeing gains of almost 0.8%. Mohit, any views on Reliance Industries?
Well, it's looking good. It's moved from strong support areas of around 920, 930 zones, and we've seen a pretty much one-way up move towards 980. We should break past levels of 990,000, and then it's at all-time high territory, and then there's no saying it can continue to rise higher. So yeah, one can buy it. You need to have a stop around levels of 965, 970 zones, and hopefully targets of 1,020, 1,040 in the coming week or two.
Yeah, there's been that one big mover this week, isn't it? The last two, including today, if it ends in the green, and the third straight session of Reliance contributing in a meaningful way to the uptick that we're seeing. Yeah, aside of Pharma, it is probably Reliance which is doing the trick, and IT is not doing all that poorly today. In fact, all of the clutch of mid-cap IT names, select large-cap IT names are doing okay. Natasha, for somebody who's watching in right now and trying to figure if he or she has missed the bus with IT already, what would your thoughts be? I mean, let's say the person is size agnostic but wants an investment in IT. What would your thoughts be? What would your rationale be for whichever stock you would be recommending, if you would be recommending?
So if they're okay with gains of in the range of 10 to 15%, they can still go ahead and make investments in the large cap IT names. Infosys, of course, is our top pick over there, followed closely by TCS, but not at this level. We would want TCS to correct a bit. But otherwise, both stocks are quite strong. The deal pipelines are quite healthy now if you're comparing them to last year, and they're expected to improve further. Plus, the movement on the rupee side is another thing which would help out these IT names. Within the mid-cap space, we continue to remain positive on Persistent Systems. We do think that the client-specific issues that they were facing earlier are now behind them, and they should start reaping the benefits of their investments on the digital side. Other than that, we are also quite positive on Zensar as well as OFSS.
Interesting. Any thoughts on Saskane? Do you track that one?
No, not really.
You don't track Saskane. Never mind. Mohit, any thoughts on Saskane Tech? I know it's just throwing it out of the dark at you, but it's hit fresh highs today and a big surge today as well. Is there a trade here?
Well, it has moved up pretty smartly and come off days high by about $50. So I wouldn't be really comfortable going long, but the chart structure is positive. If you're looking to buy it, not from a buy today, sell tomorrow, but maybe hold it for a week or two, you could see levels of perhaps 1130, 1150 on this. Have a stop around 1020.
Natasha, any thoughts on PVR? That too has gone up, and I guess we were chatting with one of the analysts 10-15 days back. He said that the growth from the non-ticketing revenues will contribute more now going ahead. So if you guys have coverage on either PVR or Inox Leisure, what's the stance there?
So I think theoretically both businesses are quite good. The contribution of the non-ticketing revenue has been going up significantly. But the big thing that one needs to remember is that a couple of months or a couple of seasons of really poor content, and both the stocks do take a significant hit over there, because even today GBOC is still a very significant part of the revenues. It's always a little over 50% for both the companies. So keeping that risk in mind, probably one thing that has contributed is that we've seen better content over the past couple of months. But keeping that risk in mind, both stocks are good, but we do think that this is not the right time to be investing in it. Let the content get bad and then you get them at better valuations.
Okay, we'll watch out. Sarvendra, any thoughts here? PVR?
I think purely from a short-term angle, I think the momentum build-up is good. So going forward next 3 to 5 sessions, I think the stock could probably add 50, 60, max, I think 80 points. But after that, I think it will head into a very strong kind of a resistance area. And from there to break out, I think would be difficult. So I would say best case 1480 thereabouts would be the target in this momentum built up, and it can very well do that. So anybody wanting to take that trade will have to have a 20 to 30 point stop loss if you're buying here. But I think post 50 close to 1480, 1500, this would be a sell. So just keep that in mind, that on a larger degree probably it could end up being a sell trade than a buy trade. A buy trade is just a 3 to 5 day trading move.
Okay, that's the call on PVR. Just pull up Castrol. That's been quite weak, I think, throughout the session today. It's seen cuts of almost 5%, almost at day's low, actually, 173. Let's just pull up the futures and see if there is any sort of build-up which is coming on the short side for this one. Yes, open interest is up nearly 10% more. Is it looking very weak on the charts? If somebody is holding short, should they be booking profits here?
Well, we've seen it's pretty sideways and pretty volatile. We've seen it move from levels of 160 to all the way to levels of 180, and not once but maybe twice. Yeah, today's price action is very negative, and we could perhaps see it drift lower towards levels of 168. If it does break those zones, then even back to levels of 160 to 165. It can have follow through, but not the ideal shot, because my stop loss would be above the day's high around levels of 182 from a risk to reward point of view. You're kind of, to make $10, you're kind of risking $10. I wouldn't want to take this trade, but if one's holding shorts, continue holding, you could see lower levels.
Natasha, today Bajaj Finance, despite all the valuation concerns that may exist, hit fresh highs as well. It's cooled off a little bit, but clearly goes showing right now that quality is still being preferred, even if it's coming at a substantial premium, even if the yields are 8%.
I think this is an argument at least we've had in the past, that people are willing to pay a premium for good quality, and that premium is to a large extent justified, as well as something that continues to be there. Would we accumulate the stock at this level? Probably not. We would still prefer for it to correct before we go ahead and take fresh positions. But we have been bullish for a while, and we continue to maintain a positive stance towards it.
The reason why I picked this one up, so I can understand in a lot of consumer names, though 4 or 5 names, corner growth, therefore do well, the others don't show as much. In NBFCs, by and large, it's not just Bajaj Finance, right? A clutch of other NBFCs are showing promise of durable growth for the next 4 or 5 years. Yet this one continues to enjoy that premium. Yet Group Finance has always continued to enjoy that premium over some of the others. What do you guys like here? If not Bajaj Finance, because of valuation concerns, what is it that you would look to, say, add on to your portfolio?
So I think there are three names within the NBFC space that we're positive on. One is, of course, Bajaj Finance. Second is GRU. And don't
tell me the third one.
It's Shriram Transport Finance.
Okay.
Because of the way the commercial vehicle cycle has been moving and moving towards the positive, we do think the company will benefit. They too have managed to maintain the NIMs at very healthy levels of 8% plus, 7% plus. And despite the fact that we're seeing bond yields move in the direction that they are moving in, we do think that they would be able to maintain their NIMs at a healthy range of 7 to 7.5% going forward. And even in terms of valuations, it looks quite attractive. So these are the three topics we have there.
Mohit likes Yes Bank, do you? I'm just kidding. Oh yeah, I know I'm going to ask you about Yes any which ways. But so why only Shriram Transport Finance? Why not any of, say, the brokerage stocks? Because all of them are showing promise of good growth. The Edelweisses, IIFL,
Motilal.
JM Financial, yeah, Motilal.
So I think we don't really look at the brokerage stocks because of a conflict of interest.
Okay.
But
do you look at banking stocks?
Of course, we have to look at the banking stocks, and we still prefer the private banking sector over the PSU banking sector, and HDFC is our top pick there.
Wow, everybody has a top pick on HDFC Bank, something besides HDFC Bank now, Natasha, because whoever we talk to, that's on the top of the list.
So I think the second one is RBL Bank. We do see a lot of upside over there, even from current levels. The bank has managed to make a niche for itself, and they're on a good trajectory of growth, and they have an excellent management which is guiding them as well. So we do think that that's a bank which one can go ahead and accumulate in their portfolios.
So that's the other bank you've named with majority of the guests who come on our show. That's one of their topic. But tell us, do you guys have coverage on the stocks which have come under the additional surveillance measures by the stock exchanges from the likes of Dilip, HEG, Graphite, or any of them? None of them?
No.
Okay. Okay. So markets are just about to turn green. We'll keep an eye on that one. And clearly, Pharma continues to lead the pack. Tata Motors, we can't not talk about the auto pack to you. Natasha, what are you making of the recent JLR numbers that we got from Tata Motors?
So I think we've spoken about Tata Motors last time as well, that it's one of those stocks which everybody is positive on, including us. Doesn't really do too well or too much as far as the stock price performance is concerned, but everything seems to be going on the positive side for them.
Do you
and
think
the
if somebody wants to put fresh money, the risk is low and the reward can be high now?
Yes, absolutely. So it's a good stock to accumulate. One has to keep in mind that there are a lot more factors which are going to influence the price movement over there. Besides the domestic factors, of course, you have to watch out for how the global economy is shaping up as well. But purely in terms of risk-reward ratio as well as the valuations, the stock looks good from a long-term perspective.
Okay. So before I come to Natasha's pick, Mohit, you wanted to come in on a point?
Can you come back to me?
Okay, I'll come back to you in a bit. Natasha, so before we thank you, an idea from your end, I think, is it IG Petro?
Yes, that's right.
Okay, so tell us the story. Why do you like this?
So we like the stock for three reasons. One is that it is the largest market. It has the largest market share for the manufacturing of PAN, which is required as for plasticizers as well as for PVC. So with such a market share and a sort of an entry barrier for other players, because it will take time to accumulate this kind of a market share. So the company has been doing well. They've been able to grow both their sales as well as their profits at a healthy rate. They're going into a forward integration as well into plasticizers, which would help them to sort of get their margins more stable. You would not see the past volatility over there. And most importantly, they're not really looking for any fresh capex from a long-term perspective. So the internal cash accruals are also going to go up, thereby helping to improve their returns. So we think that the company deserves a premium valuation because of this kind of a positioning, and we do see an upside of about 35% plus in the stock.
Okay, interesting. Natasha, Nanit, can you thank her? Okay, yeah. Natasha, great having you. Thank you so much for taking the time out and being with us today, and have a good weekend. All right, IG Petro is that fundamental take or a fundamental stock recommendation on the show. Until now, Natasha Shankar has given that. Okay, I would have loved to do the chart of the day as well. We'll do that in moments from now. Also try and get you the key highlights of the day today before we hit that break. Just before we do that though, mention what's happened not just to Sun Pharma but to Tata Motors. Remember this morning we spoke about the W formation in Tata Motors, and why is it that some key triggers could be working for that stock, including the market share gain of JLR in the UK markets and the European markets that may be working well. But Tata Motors 2% higher today after a 4.5% uptick yesterday. It speaks about some bit of serious buying that has come in to this stock. They've done various things, including some cheap insurance into the Indian markets as well. And this is the formation that I'm talking about, something that Jayesh highlighted in the morning. Let's see if it brings it back. As you can see the chart, there's two bottoms that it formed some time back, and from there the stock bounced back, and history has shown apparently that this stock would do well when such formations do happen. Sarvendra, you look at locked up charts a lot more. How does the chart of Tata Motors look? Would you take a positional call here?
Oh, absolutely. In fact, as a disclaimer, some of my clients could already have taken that because you are recommending that. The rationale there remains that since 2012, after that, it's been now almost 6 years, the stock has not fallen much below 260, 270, and 275 has been a typical, what you call it's been a very strong concentration area where I've seen close to 10 crore shares trading hands on 2 occasions. So one was MSCI rebalancing around 6 odd crore shares, and then we had another 4 odd crore shares after that. So if my memory goes right, around 10 crore shares at 275 were changing hands in the last couple of years. So if that is that big a pressure point, I think that particular buyer will still be there because he made a killing in that trade because the stock went almost doubled from that buying price after that. So I think 270, 275 is a good price point for Tata Motors because bulk buying has previously emerged there. And that is why we are seeing this throwback and we are seeing this sharp kind of a reversal coming in from that area. So I would say that someone has a decent horizon, say around 9 to 12 month plus kind of a horizon, then yes, it is definitely a buy. This is not a trading stock. You will not be able to trade it much because it's typically moving slowly, and drawdowns when they come, then they are slow and gradual. So it's not a trading stock. I would say 9 month plus kind of horizon, you can look at a target around 370, 380. So definitely yes.
Okay, that's a positional buy being recommended on Tata Motors at 311 today. Pull up Kaya Limited from the broader market space. That's been trading with good amount of gains. I guess just in the second half, you saw the stock moving higher. It's up almost 10%. Mohit, very quickly on the charts, Kaya at 981. How does it look?
The chart structure isn't the best, but it's moved up pretty strongly from levels of 850, 860. This up move can very well continue towards levels of 1100, 1150. So yeah, you can buy it for further upside. Maybe in the next 2 weeks you'll see perhaps levels of 1100, 1150. And it's come back from strong support areas, but from a longer term point of view, I'd like for it to get past levels of 1220, 1230. Once we do break those levels, then we can even head higher towards 1500. But for now, from a short term point of view, I think it's a buy with a stop around levels of maybe 950 for targets of 1100, 1150.
Okay, that's a buy call coming in on Kaya, but it's time for us to slip into a short break. Before that, just hear out some analyst views on the pharma sector and some top managements that spoke to us during the day.
I would still maintain that given the penetration levels, given the consumer spending story that continues, as long as the GDP of this country is going to be somewhere around between 7 to 7.5%, I still believe the market for room air conditioner this year will grow by 10% at the end. Summer is bad. I don't think June is going to change the picture. Last year, due to GST, there were some problems, but still it was not as bad as this summer has been. So I think it will revive. It wouldn't be a negative growth in the rest of the year. So this is something unfortunate. We will have to deal with this.
The projections I'm giving you is for FY19, so we are looking to close FY19 and touch the 100 store mark by the end of this financial year. And by FY20, I think we should be able to open another 50 stores and reach the store count 150 stores. The area under management by FY20 should be around 1.6 to 1.7 million square feet. And the optimism comes because we have 90 crores of cash on our books already, and we would do an EBITDA of around 90 crores this year. So I think we have ample capital for expansion, and it all depends on the execution. So if we feel that whatever stores we open this year and all the processes that we have defined is executed well, then I think shouldn't be a problem by growing at another 50% next year.
Well, if you're a long-term investor, I think that is one place you can be, because all the problems they had with FDA and issues in the US market, it has to find some closure sometime. And I think we are very close to that, because these problems have been lingering for the last almost 2 years now. And I think, and quite a lot of them are not very major problems, something about packing and stuff like that. So I think these are problems that can be fixed. And I'm sure they're seized the problem, all these companies. And US market is too large for them to ignore. So therefore, you have to take a bet that they cannot really survive without the US market, and they will address the problem. So therefore, I think if you take that bet for a 3-year horizon, I think these are good bets.
Are you taking that bet?
I think we should be there in that space.
Because the kind of pattern which we see, or which I have seen in that index coming, is has a very high probability of reversal. And since this time around, it has formed at the lower end of the range. I'm talking about the Nifty Pharma now. So since it has formed at the lower end of the range, I think the probability for reversal on the upside is quite high. It still has not broken out, but I'm anticipating the same. And Pharma, I've been calling for a bottom. 8,000 should be the stop loss. 10,000, 10,500 should be the target of Nifty Pharma, trading at around 8,500 right now. So if you see the risk reward is 500 points downside, 2,000 points upside is 1:4 risk reward, which I'm saying.
Welcome back. You're watching Countdown on Bloomberg Quint Live. 26 minutes left for the markets to shut shop. Just pull up what the European markets are doing currently. Sensex is in the green. The Nifty Bank is just about 0.25%, but the European markets should come up on your screen. And a fair degree of red out there. That's interesting. We've recovered despite the European markets not playing ball, which is fairly interesting. Okay, so it should not have been too difficult to get a list of names, but Yash Upadhyay usually gets a list of some fairly interesting names on his Fab 4 list. Let's find out what's made it to his list today. Good afternoon, Yash.
Good afternoon, Neeraj. So first up, we have Aurobindo Pharma. The Pharma pack is in focus today. Aurobindo Pharma, this one received the US FDA approval for a new drug used in the treatment of frequent heartburns. Now, the new product would be launched somewhere later in this month and has an estimated market size of close to $222 million in the United States. Shriram EPC is up close to 6% today. The company reported a turnaround in their earnings after returning to profitability in financial year 18. A strong order book of about 2,600 crore rupees, but that's not all. They said in their press release that they have managed their Iraqi joint venture that has managed to resolve one of its disputes with a customer for an order worth close to $230 million. And with that, this order will be restored to their joint venture and will be executed over a period of 3 years. Usha Martin is locked in an upper circuit of 20% today on the back of media reports that Tata Steel has entered into the foray to acquire the company's specialty steel business. And now there are reports suggesting that they have bid close to 6,000 crore rupees. The exchanges, they have sought a clarification, but the company is yet to reply. And finally, we are also looking at Bajaj Finance. This one had hit an all-time high in today's trading session. It's been gaining for the last four trading days, and with volumes coming in significantly higher. Back to you.
Okay, thanks a lot, Yash, for bringing those Fab 4 stocks of the day. But from that, let's move on to the chart of the day then. Financial institutions were among the worst performers in the fourth quarter, with banks like PNB and State Bank of India reporting a massive jump in their loss figure. Not surprisingly, analysts have revised their target price lower on most of them. Somit is here with more details on that. Somit, over to you.
So if you see the top 10 stocks that have seen the sharpest cut in that 12-month target price post the March-ended quarterly results, 6 of them are banks and government-owned banks and non-banking financial companies. Punjab National Bank, Union Bank of India, Power Finance Corporation, Canara Bank and REC makes to the top 10 list. And if you see, this is mainly on the back of the fraud, bad loans and the stressed asset issues that these banks and non-banking financial companies have seen lately. Now, the only filter that we have used is that at least more than 10 analysts are covering the stocks. Punjab National Bank's 12-month target price was revised by around 54% as the bank reported its highest ever quarterly loss. Union Bank and Bank of India's 12-month target price was revised by more than 30% as both the banks reported huge losses due to higher provisioning for bad loans. Now, there are also 4 non-financial companies that make to this list. Now, Idea Cellular, Granules India, DB Corp and Somani Ceramics are those companies where the target price, analysts have revised the target price by 22 to 27%.
Okay, Samit, thanks a lot for bringing that chart of the day for us. But I want to pull up IGL before we bring our next guest on the show. IGL has had a sudden move on the upside on back of very high volumes, and also on the futures side, there's been some open interest build up on the long side. Mohit, 280, very sharp move that one has seen in the last 10 minutes.
We've seen a really strong move, like you mentioned, from levels of 265, 270 support zones, which are very strong. This can see levels higher towards levels of 290 initially. If we do get past the 290, 300 band, then we can even revisit levels of 320. So yeah, this looks good. One can buy it initially for levels or targets of 280, and once we get past 280 to 290 to 300, we can even see 320 on this. Looks good.
That's the sudden jump in the volumes that the chart is showing as well. For most part of the day, not so much. The blue line is the 20-day average. The white line is today's volumes, and then suddenly a big spike up, and now obviously the average volumes will be higher than what the 20-day average volumes will be. So, well, a big sharp move, as Navneet stated, in IGL. Anand Tandon is with us to talk about markets in general as well. Anand, good afternoon. Many thanks for joining in. Just before I talk about the markets, a quick thought on these gas distribution companies. Both of them, and particularly MGL, beaten down, but clearly a market which is there, theirs for the taking, which can keep on growing as they add new territories. A bit of a bond-like business. Do you like them or would you avoid them?
No, I think definitely gas distribution is one of the more attractive places in the energy sector. And I have been quite reasonably bullish on it for a while now, though it hasn't performed as much. It's clear that the government is backing it. It's clear that the volumes are growing. And there is a chance that, at least in some parts, that there may be a increase in tariff as well for carrying costs. All of which bodes well for the sector as a whole. And clearly, GAIL is one of the best performing companies in that area.
Yeah, Petronet too has gone up in the last just 5 to 10 minutes of trade, and Neeraj was highlighting most of these companies are seeing some bit of buying in the last few minutes of trade rather. Anand, overall we've seen a good recovery coming in on the markets. Today was a bit of profit booking which came in, but we've recovered actually majority of those losses. Markets are back in the green. What's the approach now? Would you look to venture into large caps or mid caps which have corrected into 2018?
If you have a 3 to 5 year time frame, then obviously you don't worry too much about the valuations and you can buy companies which have fallen off more sharply. However, I believe that the liquidity will continue to remain a strain this year, which will mean that mid cap and smaller companies in general will find it difficult to perform. So I would take this opportunity if somebody is looking at it in the near term to actually ease off on the less liquid counters and move into the larger ones, not because you'll make more money there, but you'll be able to get out when the time comes, and the time is about to come now.
Okay, sorry, Anand, sorry, I missed that. I missed that advice. Can you repeat it for the benefit of our viewers?
So I was saying that it is a good time, perhaps this kind of recovery that we are seeing, to move out of the less liquid names, because I expect to see markets getting tighter as we go forward from here. Now the question therefore comes is, what do you do with the money? If you go and buy the large caps, then the chances are that the large caps will give you a shock as well, because I don't see them performing too well this year, given the kind of macros that we are in, along with the political uncertainty and the fact that the earnings growth are still not coming through. And I doubt very much that again this year you'll see too much of it. Wherever there is a clear earnings growth trajectory, that is priced to more than perfection in my opinion. And therefore, with rising interest rate scenario, it's unlikely that you'll get any kind of expansion in terms of the PE. So net, it's going to be a really tough market for the year. You will perhaps get some trading bounces, and that's the best you can look for. But if somebody is looking at a more passive kind of play, then you should be prepared for a near flat profit or perhaps even a loss in the current year.
Okay, that's a view coming in on the markets right now. But let's move on and look at a couple of more stocks. In fact, GAIL too has gone up in trade. So the entire pack has actually seen some traction. Reliance we highlighted Reliance, and now it's sitting with gains of 1.5%. So good going for that one too. Sun Pharma, IGL, they remain now the top gainers among the F&O securities as well. I want to pull up Dalmia Bharat. Remember, the stock was up yesterday, but throughout the week, actually, it's been pretty volatile and it has seen some losses. And as we speak, Dalmia is seeing cuts of almost 3.5% sitting at days low. So, Sarvendra, on the charts, how is it looking? Because it's been a really, really volatile week for Dalmia Bharat.
I think right now it is sitting close to some supports at around this 25.80, and the day's bounce has come from that 25.30 price area. I think that's the key level to look at. And if we were to slip below, so let's keep a round number. If we were to slip below 2500 for Dalmia Bharat, then in that case it's making a long-term distribution top pattern, which we call a bearish head and shoulder. So that's under formation. The initial declines, initial targets are over, so not a fresh trade from here. You want to wait for a break below 2500, and if that's the case, then this stock will then head towards that 21 to 2200 price area. So I would kind of wait out right now. It's not among the stronger stocks. Definitely looking weak. The only thing is that once it breaks, then the trade would happen. Till then, it's best and avoid.
But there are some flashes on your screen. The government officials saying that council to discuss bringing natural gas under the ambit of GST in the next meeting. From what Sumit tells me, these things, and frankly, I mean, if you go back to memory lanes as well, these things being discussed and rumored about at every meeting, but doesn't quite turn around. If it does come about, companies like GAIL and some of the others will benefit. Companies like IGL, MGL, etc. do not really benefit, I would reckon, because it will be a pass-through from there and any kind of benefit that comes in. But the stocks are duly reacting all right. Difficult to give a, I wouldn't want to get our chartists to give in a chart check out here, because these moves could well die down, because this is just a government official saying that there's a possibility and not something that is a bit of a certainty here. However, what we can do is try and figure out what stocks could come in and out of the F&O pocket, as well as talk about what dealing rooms are recommending in the session today. What should we do, Navneet? Come to you first or go to Darshan and Yatin?
I just got one stock, so I'll complete that. Jet Airways is the one which is likely to enter into the F&O ban, and as per the recent, just the last calculation I was looking at it was 94%. Remember, for the stock to get into the F&O ban, it has to breach the 95% mark. So watch out. The trends definitely change in the last 10 to 15 minutes of trade, but it is very, very close, Neeraj, to getting into the F&O ban.
Okay. Watch out for Jet Airways could enter into the F&O ban. Bobbing between the 400 mark, 397, 398 is where it went down to, currently at about 401, down about 2.5%. Also a good time to take stock of what dealing rooms are recommending in the session today. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Neeraj, Ujjivan, that is one stock which is looking at some traction. The stock has been hovering around the 400 mark for quite some time now. So the stock is trading in a tight range. Dealers do indicate, to do a BTST, which is a buy tomorrow, buy today, sell tomorrow kind of a strategy. So Ujjivan is on the positive radar of the dealing rooms. So is Reliance Industries. And look at the spike which has happened in the last 15 minutes on heavy volumes. Nearly 60 lakh shares traded in the cash market already for Reliance Industries. And dealers are positive that we could see a 4-digit on the stock quite very, very shortly in the next 1 or 2 trading sessions. So dealers are constructive of Reliance Industries as domestic funds lap up shares. And finally, we have Ashok Leyland, wherein dealers are indicate that there is short selling in the marketplace. Stock is down 2%, almost 8 million shares or traded in the counter. But Darshan has a few more stocks to talk about.
Yeah, so Sun Pharma is up almost 8% post the VAI for the Halol plant. But most of the analysts I spoke to do indicate that it's pretty much priced in. The Halol resolution is priced in. The management had indicated it. So they don't see substantial upside coming in on Sun Pharma at this point of time. The other counter which is trading near record highs is Tata Elxsi. Some of the HNIs are actively accumulating the counter. It's more of a momentum play also on the counter. And finally, watch out for the PSU banks. A lot of dealing rooms did manage to indicate that, across the board there is accumulation that is seen on the PSU banking space. Today also the important meeting is there between Piyush Goyal and the heads of bank. Probably some bit of consolidation may happen. You could get news of mergers of some of the PSU banks. So this is a space which is looking rather attractive. Heavy bets have been taken on the PSU banks at this point of time. Across the board, no specific banks as such, but across the board, PSU banking is being recommended.
We'll watch out. Thanks a lot for that. Yesterday Navneet highlighted in the mail and today in the FNO link as well that some of the PSU banks had seen some long positions. Anand, would it be much ado about nothing again? Would it be safer, Anand, to let it be shown in the print before you go out and be a braveheart and buy into PSU banks? Because we've seen one false move like that happen, right? 24th October, probably the biggest announcement for PSU banks, and the stocks are trading at what, 30-40% or 50% discount to the prices that went up then. Would it better to wait for the print to come out before you try and take a call here?
Well, what happened then was the assumption that there will be now growth capital. Turned out that the hole was deeper than people expected, and most of that money is already gone, if not all of it. The question now is that, what is it that the proposal will come through? If you merge bad banks into better banks, I don't know what the market will be excited about, because it will just bring down the bigger banks as well. So at this stage, yes, I would agree with you that you want to see what the print is about. But if there is a move to actually merge the smaller banks into the larger banks, I would stay away from the larger banks, because I don't think that you really know what's going on in the smaller banks. Maybe there is still more to come. That said, I would argue that there is definitely a time and place for something like a State Bank of India, where I'm hoping at least that, given that they've just merged with their smaller subsidiaries, that they will not be inflicted with more pain in terms of having to pick up some more of the loss-making brethren that they have floating around. And therefore, they may actually continue to do reasonably well from here. And if anybody among the larger banks does not have to be merged, then I think it's time to definitely look at them.
Okay, let's see if consolidation is the way forward for the PSU banking lot. But as of now, Andhra Bank, Allahabad Bank, both of them have been doing pretty well. Mohit, on the charts, would you take any bet on these two stocks?
I like to avoid PSU banks because they very rarely show follow through. They always show these signs of them moving higher, and it looks really good on the charts, and it's bottomed out, and then you see no follow through a day or two later. So I want to avoid the space completely altogether. But if one is saying that no, I want to take a bet on PSU banks irrespective, then yeah, SBI is looking good, and this can perhaps head higher towards levels of 280. So this can be bought with a stop around levels of 269. But again, I like to avoid the PSU space.
Okay, it's best to avoid the PSU space according to Mohit. And we've been talking about the Pharma pack, and something like Apollo Hospital, just want to highlight that too has been quite active throughout the session today. Apollo Hospitals is sitting with gains of nearly 5%, almost at day's high level. Sarvendra, a quick view on the charts for Apollo Hospitals?
I would say that again, this is not a trading stock, and today's reversal is looking pretty decent. The only thing is that this is the first week where it is trying to reverse and putting in some higher numbers, and volume is missing. So the price reversal is good, but volumes have not confirmed. So I would say that wait out for Monday, Tuesday. Yes, it is among the stocks probably which has got the potential to form a base and a bottom. As long as it now holds above 900, I don't see any problem for the stock going forward. But the only thing is that it may take some time, and it would definitely not be a trading stock. Anybody with a 9-month plus kind of horizon can definitely look at this stock at around 900, within this 900,000 band. And if you are doing so, then you are looking in for targets in the region of around 13 to 1400. So I think around 1400 is possible by the end of the year, provided it does not break 900.
Okay, just before we take in closing strategies, Navneet spoke about Jet Airways as likelihood of getting into the ban. I'm just wondering if we can take a chart check here and as to what could happen if indeed that action does come about for Jet Airways. Sarvendra, any quick thoughts here on Jet Airways, the possibilities of it entering into the ban as well?
See, I think the stock looks weak, so there's no doubt about that. So if at all anybody has to do a trade and try and lock in a trade today itself, before the window closes, if at all it goes into the ban, then the window closes. So I think the trade would then emerge on the sell side only, and then you could have a small stop loss there. and you can say that as long as the stock now trades below 412, you could probably look at a target close to 365, 370. So that would be the trade, even though it's slightly late. The stock has fallen right from the cliff, 600 odd to 400 is a very big fall. But as I said, if you have to just get into that window and put a trade, it will be on the sell side.
Closing strategies then, should we take them? Mohit, can we come to you first? One top closing strategy?
Well, actually, I like the consumer space pack. So Marico is one that's looking really good in the charts. It's breaking out of after like maybe a year of sideways movement, and this can head higher towards levels of 360, 365 next. So this is a buy with a stop around levels of 335, 340. Also, I like Emami. This is kind of made a strong base formation around the 1050, 1040 zone. This is moving higher. This can head higher towards 1100. So this also is a buy with a stop around levels of 1050. Just one last stock I want to talk about is ITC. We've seen it move down pretty sharply in trade today, actually 1.2%. And this has pretty strong support zones around the 255 to 265 zones. So if one is looking to accumulate from a slightly longer term point of view, this perhaps is one that you should keep on your radar. And if you see further drops, keep accumulating this stock.
Okay, so those are some picks from the consumer or FMCG pack from Mohit's side. Sarvendra, what about you? Your top closing strategy would be?
I would say if I have to do a BTST, I would do one trade, which is DRL. I think clearly with volumes, the stock is turning today within the pharma space. We were discussing the pharma space earlier as well. My sense is that the stock could do 2100 possibly in session tomorrow. And if you are doing that, then you will have to keep a stop loss at 2034. So I would say buy DRL for a target of 2100 with a stop at 2034.
Okay, a couple of other media stocks have also moved higher, but we've already highlighted PVR. So you've got Network 18, TV Today, Hathway. All of them are seeing gains of between 2.5% to almost 5.5%. HD Media just mildly in the green right now, up almost 1%. Anand, any view on the media stocks?
Not really. It's not been something that I've been tracking very closely.
Okay, you suggested that earnings recovery, could be elusive for FY19 as well. So how should one play the markets? What are the themes that you're looking at?
Well, I'm looking at the contra themes, right? The pharma has been something that I've been pushing for a while now. I think the energy sector, both power as well as gas distribution are two areas that I think are reasonably priced. And there are always smaller areas that you could pick up, smaller companies. The one area that I would be careful of is anything to do with consumer. I think it's overcrowded, overdone, and is bound to disappoint.
Anand, we're doing the comparison of what's really happening to, or rather comparing the auto majors, YTD performances, the ones that went up earlier were not in 2017, have been lackluster. Just that the last few sessions, the laggards, so to say, in the four-wheeler space, the Marutis and the Tata Motors have started making a bit of a pullback. Maruti is now at 8,900 from lows of about 8,400, 8,300. Tata Motors is at 311, 312. The last couple of weeks have been pretty good for them. What's your view on the four-wheeler space?
Well, I like the larger four-wheelers. If you're talking about four-wheelers, I love the trucks. They may still have some upside left. But if you are looking at passenger vehicles, I think Tata Motors is a hope trade. There is no doubt that they are doing better in the domestic market, but the overseas market continues to drag, and we have to see how the new models are accepted. If that does well, then yes, there is a potential for upside. Otherwise, it can be a major drag there. As far as Maruti is concerned, that's a perennial favorite, but the problem is that it is also now priced beyond perfection, and there is going to be some improvement, some additional competition coming in with Kia Motors, etc., starting production in India. We don't know yet how that will pan out, so it's early to say that can be a major threat, but it will certainly eat away at some margins for sure. So to my mind, again, the upside in Maruti is pretty much well known, but therefore, and more than adequately priced. The downside we don't know yet, but it's something that can be a real possibility.
Okay, Anand, we'll leave it at that note. Appreciate you joining us today and taking us through your thoughts on the markets. Have a good weekend. Well, there were some flashes there on your screen where Tata Steel has clarified they've not submitted any bid to buy Usha Martin Steel. And just to highlight, Usha Martin was moving higher in trade today. Let's just see if the stock has come off from those levels, because the sole reason for the stock to go up was this news. So it was up, I guess, locked in upper circuit with gains of almost 20%. The circuit has been broken now, and the stock's trading with gains of nearly 12 to 12.5%. And it looks like the closing is just going to be flattish today, and clearly the winner has to be the Pharma pack. But a lot of other counters, Z has also gone up in trade among the Nifty constituents. That's up almost 1.5%. You've got stocks like Bharti Infratel, that's seen gains of nearly 1.5%. But just 3 minutes to go for markets to close. So let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, not bad considering we had a gap down opening. I think the closing is going to be flat.
Pretty good, and keeping in mind that Europe was actually not doing all that bad, or is not doing all that well, we have managed to do fairly well for ourselves. So good going for the large caps. The mid caps and the small caps have done even better, I must say. So bring up what's happening to the BSE mid cap and the small cap indices. Fairly good performance, 0.5%, 0.8%. It's not something that you would not like. Let me sum up the large caps, and then Navneet, of course, will bring up the activity in the mid cap and the small cap and in the market as well, or the broader markets in the more liquid universe by and large. Pharma all across, Sun Pharma, Lupin, Dr. Reddy's, Cipla, these are the top performers. There is some strength in Bajaj Finance, up about 1.7%, hitting fresh highs today. And the big boy Reliance Industries, 3 days in a row, is up about 1.3%. What's not done well? Amongst noteworthy names, HDFC's not done well. OMCs, BP, HP, RC haven't done well. And ITC amongst the heavyweights is down in the session today. So these would probably constitute as the disappointments in the session today. But, well, fairly decent show by Pharma and to an extent IT, and not too much of a downward take by some of the large banks. All of that leading to the indices ending just about flat. But what about the more liquid universe, Navneet, and what are the broader markets shown?
Well, they've been doing well, at least in the last 3 trading sessions, and there were a lot of winners there. So let me take you through the gainers. Spark was up in today's trading session, and that was basically on back of the news for Sun Pharma, where the 3 observations which were issued by US FDA, they've got to go ahead now to take a voluntary action there. So 11% higher, which meant there wouldn't be any re-inspection. Kaplan Point, a counter which has been pretty volatile, once again was up in trade, locked in upper circuit with gains of 10%. Just in that last half an hour to 45 minutes of trade, you saw the gas distribution companies moving higher. The news was maybe they could come under the ambit of GST. We'll have to wait and watch. The news is not confirmed. 5.5% up for that one. Well, also news of the interim finance minister Piyush Goyal, will be meeting the CEOs and MD of a couple of PSU banks. So let's see if the consolidation comes across or not. But stocks like Andhra Bank, PNB, UCO Bank saw a sharp surge in today's session, especially UCO went up in that last half an hour of trade, up 11.5%. From the media pack, PVR was the top gainer. If you look at the Nifty Media Index, that's closing the day almost at day's high, and also the entire Pharma pack was up and about. And from there, you had Apollo Hospitals too, which saw strong gains in today's session, 5% higher for that one. On the losing side, Castrol, the top loser among the F&O securities, down 5%. Day's low closing, fresh short position seen for this one. Quality once again locked in lower circuit of almost 5%. Remember, despite of yesterday's news that they would be considering a buyback, but no respite for this one, 5% lower. Dalmia Bharat was down 3% in trade, and something like BEL, which a lot of technical analysts now suggest it's come off from those levels of 190. There could be a rebound, but still BEL in today's session saw cuts of 3%, closing around the mark of 118. Well, that's about today's closing, Neeraj.
Yeah, well, and that's the daily close, and it's not been too disappointing. Bring up the weekly close as well. The last 3 days would have ensured that the Nifty performance for the week would have looked reasonably okay. About 0.5% up over a 5-day period. And, well, Sun Pharma, yes, but I think the true heroes would probably be 1 Tata Motors, 2 Bajaj Finance, and maybe Reliance Industries, Navneet. 5% higher, big move for the big boy the last 3 sessions, and given some support by IT, this is what helped the index do so very well this week.
Yeah, and actually what capped the moves on the upside will be HDFC Bank with 10% weightage, despite of that news of, that limit opening up for FIs. We couldn't see that sort of buying coming by. And also some stocks like L&T that was down down for the week, and also your private banking counters like Indices Bank and Yes Bank, they also saw cuts of 1% or 1.5%.
Yeah, so these are HDFC Bank, probably the kingpin out there. What about the broader markets though? Maybe the Nifty 500 or the NSE 500 should come up, and well, HFCL, interestingly, Shankar Sharma speaking about it at the Sohn conference, but some bit of bounce back for Avanti Feeds, which was interesting.
Yes. Steel Authority had a really good week, 16.5% higher. UCO Bank, I think most of the moves have come in today's trading session. But on the losing side, look at the losers, and they are usual suspects. Quality, Bhushan, 1% Beverages, no respite for any of these stocks, or be it PC Jewelers.
And Infibeam as well.
Yeah.
By the way, just a couple of things before we get the market breadth for today and the turnover for today. If we can get the stock price of 1% Beverages on the screen, somehow missed marking it, but if we can get today's price of 1% Beverages here, you will see what I'm talking about. I think for a brief moment it left, the lower circuit opened up in today's session. The stock ending higher, about 1.5%.
So it's been locked in lower circuit for the last 9 sessions.
Yeah.
So at least that's been broken today, but let's see if this can last. It's
difficult
very
to say.
dicey,
Really difficult to say. So forget this. The market breadth and the turnover for today should come up on your screen once before we go back to our guests.
Whoa.
The breadth was reasonably okay on a day when the markets have been flat, but the turnover, and let's see if the F&O turnover did pick up or no.
No, I think today was below the average of 5 as well.
Almost, yeah. Fair. I mean, the cash market turnover was slightly lower. Anyways, not a bad day of trade though, considering what Europe was doing, I guess. Final thoughts from our experts, and Sarvendra, what would your thoughts be for how we are set up for next week?
I think, Neeraj, I think the next week should be very, very critical going forward. So that there's no doubt about that, because the areas that we trade right now, you can't stay at these levels. Either you go down or you eventually break out. So I think in that sense, the next week is very, very important. With the weighted average, we'll have to see where we close, but Bank Nifty has clearly closed negative for the week. So there, I think definitely the momentum indicators and setups are slightly started to weaken, and the Nifty Bank Nifty ratio also is now slightly inverting. So let's see. I think either the Bank Nifty pulls down the Nifty or the Nifty pulls up the Bank Nifty. I think that answer we will get next week.
Okay, Mohit, what about you? Your thoughts on markets for next week? How should one be placed?
Well, on the Bank Nifty, the broader the range which we're trading in is between 26,000 and 27,000, and we've closed right in the middle of that range. So there's really kind of no idea to go long or short on the Bank Nifty. However, the Nifty's range is between 10,400 and 10,900, and we've closed closer to the upper end of the range, maybe because of heavyweights like Reliance and a few other outperformers. Maybe even IT helped it move higher. So the Nifty is surely looking more bullish than the Bank Nifty, and we've very rarely seen a divergence in the two for a long period of time. So right now we are range bound. It's very choppy. You barely get 2 days in a row where the move is in one direction. So to take even a positional call is difficult as of now. Yeah, you got to be nimble, and from an intraday point of view, see where you've opened and then trade accordingly. So to take a call on the index is not something I'd want to do. I don't have an index call right now, but we'll see how we open next week and how we react to the open and take trades from there on.
Well, just pull up the Dow futures as well if we can, because Europe is certainly not doing all that well. Dow ended in the green yesterday while Nasdaq was in the red. Just wondering what Dow futures are up to right now, 0.5% or so lower. Well, maybe the handover from the global markets will not be all that strong. We'll get to know about it when we get to know about it. Sarvendra Srivastav, Mohit Gaba, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time. But with that, from Navneet and me and the team that put this show together, thank you so much for watching. Stay tuned though. We'll get you the day's wrap of the day's trade on the Bloomberg Quint Market Wrap on the other side.
Thank you.